Good morning, everybody. Welcome to today's edition of the Daily Market Commentary. Hope everybody had a great trading day yesterday. For those who are new to the channel, do me a favor, make sure you click that subscribe button down below so that you can get updates as they become available. Let's dive right in. So looking at the S&P this morning, I have a little bit of an area where we are up about 9 points, but we got a strong reversal yesterday during the day, and it just continued the rally. And this rally really started in the overnight hours. We started pretty early in the overnight hours and kind of continued to rally higher. I thought we may get a little reversal right here. But let's take a look at that reversal and why that never happened. Now, remember, it's a dashed line trade, which means the trade's activated when price comes halfway into the level, and then we would get short as it comes out of the level, and then it's canceled as it comes if it breaks the top before coming out of the level. So looking at this, we had price come in and drop out of it. Now, this is not enough of a penetration to get us into the trade based on the rules. So it chops around a bit and then pops up straight through it. So even if you go down to a smaller time frame, what you'll see is that we came into it, did not get in, popped back up. This activates the trade. But do we have our trigger before breaking the top? The answer to that is definitively no. And then it comes down and chopped around in here for a little while before then moving higher. So while this level was a failed level, if you follow all the rules, it's not a level that we're going to get filled on. So that's really kind of why I put that in play. It was in the middle of that move down. I wasn't a huge fan of the way that it arrived back into here, although I did have the confirmation entry set up. The fact that we came into it and then chop just a little bit before it and then blew right through it was really pretty telling. Now, we are coming up to a potential reversal point right now. What I don't love about the way we're coming up to it is we've lost a lot of our momentum and we're just jumping around as we get up to it. So I'm going to leave this one out for the time being. I still have my breakout up above here. If we hit this and come down just a smidge, but without coming down hard, this could actually become another breakout position. So I'll watch that later in the day. In the Nasdaq, I didn't have the same short even set up, not anticipating what was going to happen in the short. So this one, we didn't even have the short set up. I will say that if we get a bit of a pullback, there's a decent little reversal opportunity right here. It's a little tiny, and not easy for everyone to see. But this little area right here, remember, we're on the 60-minute chart here, could be a decent little opportunity. Now, why? Well, because think about it. We wicked all the way up to here, and then we came back down, and then we wicked all the way down to here, and we came back up. Now, these long wicks right here, I think of that as wiping the slate clean. This wiped out any of the old orders that existed in this price range from everything to the left. And so this had to be a new accumulation of orders right here before then price moved up. The other thing I like about this is right after the open. So a new accumulation of orders that people wanted to get in on this rally, maybe not getting their orders filled, and there could be still some opportunity inside there. If that looks like it's a little too rich for your blood from a risk perspective and you want to trim it down a little bit, you could theoretically just take it down here. If the other one is a little too rich for your risk tolerances and what you allow yourself to do in your trading style. I wouldn't go much below a 15-minute chart, though. If you guys notice, I don't really go below 15-minute charts. I kind of stick to 15 minutes as my smallest time frame. Looking at crude oil. So crude oil, we still have our levels above and below current price that we have not yet touched or hit in on. We could, use this area here where we had the strong breakdown for a potential reversal trade. So just keep that one in mind as price, kind of comes back into that region today. Gold. Now look at gold. We came down and we did a touch and go out of the level. Now, typically I would say that our opposing level is up here for our profit target, but we have not quite been able to accomplish that level. So at the very least, I hope you've taken your stop and moved it to break even, as it did move a little 2-to-1 out of here on this touch and go. And now that it's back in, I'm not as big of a fan of the level the second time around. So I'm going to remove this and add this. This would be, if we do get a rally back up, I'd look for a potential reversal right here to kind of join that bigger picture move down as it is happening. Looking at our bonds, so sliding over to the bond market. So in the bond market, we still have our breakdown short in place below here. Remember that little touch was on the announcement. I believe that was a fake out, breakout, shakeout. So remember, that was before the big Fed announcement last week. So this level is still something that can remain in play, but there's nothing on here for strong reversals that I like, which is very indicative of the fact that we're chopping along sideways. Now, in the Aussie, we've rallied back up to our potential reversal point, and we're starting to get a little bit of a move down. This is a fairly weak arrival into here, so manage your stop very, very tight on the Aussie trade. The Euro, we're still in between our entry points on the Euro. And the Canadian, our breakdown is continuing its move. So the only one on here that we've really got any change to, and really it's not a change, but the entry is the Aussie. Great British Pound, Japanese Yen, nowhere near our entries, although coming closer on the pound. I am not a fan of this very sideways price action, that I've seen in the pound before getting to that area. So the sideways price action means that there's an equilibrium of buy orders and sell orders, and there's not going to be as much reversal when it does come up into here. Although remember, it's a purple line, so those purple lines are done on smaller time periods, so they got a slightly lower degree of probability. Japanese yen, our levels way, way, way up here, nowhere near current price. If I look at that on a 4-hour chart, you'll see that it's really just been sideways chopping. And so when we have these sideways periods of chop, things are always going to be more difficult, but it is still gonna have some trades. You just got to be a little bit more patient while you're waiting for it to come to your area. So looking, back at our main markets, the S&P, Nasdaq, gold, and oil, which is my main four. I do have plans for each one of those. Although the S&P, I'm really more playing. I like the breakout. I would love to see this S&P drop down from here just a little bit, not a big drop down from here. I'm not willing to short this thing based on our arrival. I'd like to see it base, maybe put in a little bit of a rising triangle pattern and then get long on a potential breakout even from here. That would be a place to go. So, all right, everybody, I hope you have a great trading day today. If there's something you need, please feel free to send me an email. Make sure you give me a comment down below or hit it with a like. All of those things make these videos much more searchable by the YouTube algorithm, and that kind of spreads the word, spreads the love. Talk to y'all soon. See you.